such opportunities. And despite you would have seen there are so many significant pessimistic issues across the globe, equity markets are still positive. It is just because it seems that now India is becoming a land of opportunity. And what is keeping things so optimistic is domestic political status quo, lack of other stable options for foreign money, and domestic savings, which are coming into the equities in form of mutual funds and other issues. And though there would be a correction, there is no doubt there would be a correction. But what will be the correction? Next trigger for a market correction is a risk that we can't visualize right now, because anything which you can visualize is mostly priced. Okay, so the market setup, as I see it, Fed meet signaled that the rate hike cycle in the US is almost over, and that started the rally. And December 13th, there is a Fed meet. So all attention will be on Powell's remarks and whether he will push back against the market consensus predicting rate cuts in early 2024, that is next year, calendar year. But it could also be a scenario where interest rate would remain at these levels for longer than the what the market is anticipating. In India, the RBI revised upwards the GDP forecast from 6.5% to 7% for FY24, and that again gave a fillip to the rally. The governor believes that economy is firing on all engines, and a strong growth outlook and manageable inflation should support the ongoing optimism. The emergence of new industries, that is electric vehicles, green energy, EMS, electronic manufacturing services, and China plus one all support the idea that India will likely continue to have a strong medium term corporate capex cycle. So at end of the day, it is the earnings and not just election which should drive Indian equities. So basically, people are penciling at least 15 to 20% earning growth in Indian equities. Okay, let's discuss few stocks which were in news. Himadri Speciality Chemical announced its plan to set up India's first commercial plant for lithium iron phosphate cathode active material. They plan to produce 2 lakh tons of cathode material that can power 100 gigawatts hour of lithium ion batteries. 3 years, they are saying they will create 40,000 ton of capacity to produce this in next 3 years. Though they want to make total make a capacity of 2 lakh tons. So FY25 expected EPS is around 10 to 11 rupees, and the current market price is around 300. So this stock has nearly doubled, or has become 3x actually. It was below 100. It has reached 300 in 6 months. So I would request to wait for consolidation before adding the stock. Mrs. Bectors Food Specialities is working with Walmart, the largest retail chain in the US, for ramping up its biscuit exports, suggesting a huge growth opportunity. In India, they are strengthening the distribution reach in domestic biscuit and bakery segment, and they are trying to double their retail reach to 3.2 lakh outlets by March 24, because it is the supply chain and the distribution which finally decides as to how much of revenues they generate. They are strengthening in UP, Rajasthan, Delhi, and southern markets. They were in typical North India based uh, company, and they are enhancing B2C sales of bakery business. So potential, they are planning to reach around 2,400 to 2,500 crore revenue uh, once all capacity is operational. So FY25 expected EPS is around 25, 26. So in the present price, it's around 45p, and it can go up to 1200, 1300 from here. Coforge will benefit from opportunities in areas of digital transformation, product innovation, legacy modernization, and cloud migration. They guided to a revenue growth of 13 to 16% constant currency in FY24, while rest of the people were flat to negative, especially the large IT companies, IT services companies. Growth is supported by three key verticals: banking, financial services, insurance, travel, and transportation. Q2 order inflow was $13.313 million dollars, and order book at end of this year was around $935 million dollars. FY25 EPS expected is around 190. So presently it is at around 30 times, and operating margin is around 18.3%, which is expected to be maintained. Utilization would improve from current level of 80%, and there is 1.7% increase in employee count. Hence, keeping all these parameters, this stock has moved from around 5,000 levels to 5,700 levels. So again, to be kept in mind, because if the US and Europe is going to perform better than expectation, then IT services should also perform slightly better. So coming to certain technical issues, US 10-year yield, as expected, dipped, and then on Friday it went up. It bounced back from this 50% retracement zone of which we are expecting around 4.1 odd levels, and also after the non-farm payroll was slightly better. So it is expected that probably the rate cuts may be delayed or something like that. But one positive statement can turn this yield, though it has come down a lot now. It has come down from level of 5 in October to level of 4.2 level. Brent crude, again, it is correcting, and I think it should test this 70 odd level in this down cycle. And this is positive for countries like India. A dollar index, again, it is now below the 200 EMA, and it has now reached to around 103 levels. It should test this 100 level or below in this downward movement, because if the interest rates are not going to go up, then the dollar will also weaken, which will again benefit the emerging markets. Gold, as expected, it touched the all-time high and dipped below that. So if the dollar again strengthens, then the gold will not go up. But if there is no uncertainty in the world, there is no reason for gold to go up. So probably it should correct from here, because that is my understanding that at these levels it becomes expensive, and then the selling comes. So I will wait for lower levels to get again into gold. Dow, it has again, like rest of the markets, if you see the weekly charts, it has had 6 positive weeks, and it is above the downward trending trend line, and it bounced back from the this upward trending trend line also. So it is expected to test its all-time high after it is consolidating now in the last week, because they are waiting for this FOMC meet on 13th, and after that the rally should again start. Indian 10-year yield is again declining, and it is now at its 50 EMA of around 7.2 odd levels. So once the rate cycle turns, then it should correct significantly. But if you really see, the yield moves from around 5.8 levels to around 7.6 levels. So now it is declining, because on anticipation that the rates will now get lowered in the next calendar year. Now, Nifty weekly chart, if you see again, we've had 6 positive weeks after this dip in October, which was because of the high bond yields in US, and it breached that 21,000 levels, and it is now poised to go up. It is above all the moving averages. So right now the momentum is good, and the rally is now being led by banks, IT, and capital goods like L&T, etc. So let's see. There is no pause, and there was a gap also after the positive election results. The daily chart, if you see on the daily charts, we had two dojis, but again we had a positive day on Friday. So the rally still is pausing right now, and I'll show you in the next chart. So here you can see it bounced in October from the 200 EMA, which was expected, and from there the rally has again started. So this is the hourly chart. So what I was trying to say is that short term, the 20 hour is the support, and the significant support is the 40 hour moving average, and even in whole month last time, last November and all, it never breached the 40-hour average. So that is the support. Now this 40-hour has moved up to around 20,741, and 20-hour is around uh, 20,900. So it bounced back on Friday. So on Friday, it bounced back from the this what 20-hour average. So it dipped there and then bounced back from there. So keep these two levels in mind. On higher than 21,000, this is in blue sky territory, so it can go any level depending on liquidity. Reliance, it was in a downward trend line, and then it has broken out from there. Now it is now if you see the 20 EMA has crossed the 50 EMA, and now it's an uptrend. So till the time it remains above this 2400 level, it should be positive, and it is again waiting, and there will be some trigger for it to go up right now. So this is one of the reasons why the Nifty is doing well. The other reason is this Tata Motors. So if you see, it has Tata Motors is broken out, and above now the 20 EMA is and 50 EMA, and it's above its all-time high, which is denoted by this. So it has broken out above that, and it's looking positive. And with this successful IPO, so they have more money to reduce their debt. Tata Power, it was having a declining trend, and then it has broken out this week, and it had a solid green candle on Thursday. So it gave back something on Friday, but the trend is very positive, and it should continue to do well because there is a re-rating which is taking place in all the power, complete power sector right now. Nifty Bank, it had a positive week, and it has broken above the all-time high, and it is now gone to 47,262 after a solid green candle on Friday, in the last week, and a rally on Friday. So uh, be positive with this, and in my view, now Nifty Bank is taking center stage. So if there is no reversal signal, it is better to continue with long positions and not to short this market. And this next leg of the rally will be now led by Nifty Bank, and not and it will take the Nifty also along. This is a daily chart. See, it has broken up above the all-time high, and now it had these four candles clearly above the all-time high, and it is now heading up, and it can go up to 48, 49,000 now in this rally. The reason is HDFC Bank. Uh, it has broken above the 200 EMA in this week, and now it is heading above, clearly above the declining trend line. And I think it should test this 1700 levels, and once it breaks this level, then it may test the its high of 1750 odd, and then may head to 2000 maybe in a month or so if the short covering and the inflow of FI money continues into this stock. And you can see a kind of a rounding bottom or a cup and a handle which is being getting made. So that is a positive technical indicator. And this is what I was referring to yesterday, that there is a cup and handle being formed here. So it looks positive here. Uh, ICICI Bank again, in my view, till the time it is above 1,000, the 1,000 was the last high. So it has gone above that, and till the time it is above 1,000, it is positive, and one should go long on this. It has again broken above all its 2050 EMA. It tested the 200 EMA and then went below that to around 900 level, but has nicely bounced back along with HDFC Bank. So these two should power the uh, Nifty Bank and simultaneously power the Nifty also. PSU Bank rally is continuing, and again it has reached its all-time high and above all averages. So be positive on this because the PSU banks, the books are improving, But the point is that beyond a level, you can't just keep buying PSU banks based on only price to book issue. It is also the loan growth and other factors which have to be kept in mind. The SBI has broken out below above the declining trend line. It was in a kind of a consolidation, and now the 20 EMA is going above. It was making lower tops and lower bottoms, and now if it crosses this 620 630 levels, then it should have another set of rally. But it will be very difficult for this stock uh, because of inherent size and other issues. PSC index continues to do well, and it is on a momentum now, and it should perform. I think there was some profit booking on Friday, but that is expected after such a long rally. Uh, this is what I want. I was referring to because of the volatility for all these all the people who are into option selling. So I was just discussing this. This is a 5 minute chart of Friday only. If you see, uh, the high and high was around 291 on that day, and the low was 281. So that is around 3 to 4% movement within a day. So after it opened, it went up, made a high, then corrected, then made a bottom, and then go up. So this is the momentum one has to keep in mind if you are into short-term trading and see this chart. So the similar thing was being given by 3 4% move is being given even by Coal India and other PSU stocks. HL, I was very positive on this. So it had this rectangular consolidation pattern, and then it has broken out from there, and it's now above all the moving averages. And with all the positive news and the revenue growth and the positivity associated with this growth stock, uh, this should be heading to its 4,000 odd level in at least next year or so. So just remain invested. There is no question of selling this stock or profit booking. I had a positive week, and it had gone below the uh, its upper trend line, but then it corrected back, and this is basically because of the money flowing from FIs. So all the basic IT stocks did well. Infosys, if you see, it's a very long-term chart. From there's a declining trend line, and here it has broken above that now, so it becomes positive here. And though people could see that this was a uh, cup and handle and all that, but that failed. So just watch out for these because sometimes the charts also take you down a garden path. So just be careful on these stocks because they have run up a lot with all the positivity and all those issues. Midcap index remains positive, and it has again gone to all-time high, and there is some pause now because mid caps have run up a lot in this year, but the momentum should continue in good mid caps, one because there's so much of institutional buying and HNI money which is flowing into all the good quality mid caps. Same thing with small cap index. It had a negative day on Friday, but it is expected after such a big rally. Till the time it is above the 200, it's 20 EMA, it is positive. So no need to worry. Now I'll cover few stocks today. Uh, First is Action Construction, called ACE also. It boasts a diversified portfolio encompassing various segments, including cranes, construction equipment, material handling equipment, and agricultural machinery. So basically, all the sectors which are related to capex and growing economy, or where the focus of the government is. These versatile assets find application in diverse sectors such as construction, infrastructure, manufacturing, logistics, and agriculture. World's largest manufacturer of pick and carry cranes, commanding a remarkable 63% market share in the mobile crane segment within the country. It dominates the domestic tower crane segment with a majority market share exceeding 60%. It has plans to launch first fully electric mobile crane, India's largest mobile crane, 180 tons crawler crane, 35 tons 4x4 crane. Is also working on two specific models of backhoe loaders and telehandler, which is not sold in India and basically for export market. So there is a revenue opportunity abroad also. Now, if you see the P&L, uh, it has shown decent growth and there is a improvement in margins also. And this year margins are expected to improve by around 2%, and with at least 25% revenue growth and profit growth with an expected EPS of around 20 this year. In FY25, this is in million, so it's expected to reach around 300 and 3,300 crores revenue in FY25 with a EPS of around 28, 29 or so. And PAT margins and the EBITDA margins are expected to improve. So it is becoming cheaper now. It's reached its all-time highest quarterly revenues and margin. Robust revenues and volume expansion is observed in every segment in which it is operating in. It will support all the government's plan for infrastructure construction. Construction equipment segment, it had 100% year-on-year growth, and they are doing capex, which should take their revenue to around 4,000 crore now in next 1 or 2 years. So this is expected to inch up, which will, with better EBITDA margins, it should do well. They are aiming for 25% growth rate. I think the target should be around 1,000. Growth drivers are urban infra, railways, manufacturing, agriculture, logistics, airports, etc. So we have seen what is the EPS.
Tarun, they are manufacturers of these cranes?
Yes, sir. So these are the cranes they make. Let's see. These are the cranes: pick and carry crane, lorry loader crane, self-erecting tower cranes, crawler crane, truck crane, tower cranes, construction equipment like these, then material handling equipment, agricultural equipment. So they are in every field, and so you can't just. But it is basically the construction equipment is these ones where there is 100% growth they had from year on year growth in last quarter. So this is where they are making maximum thing, but rest are also required. Now, if you see that income is growing, EBITDA margins are improving, PAT margins are improving, debt is now negative, so there's cash flow positive, working capital days are better, and ROC is improving, so profit should improve. So, interestingly, this stock regularly gives an opportunity to enter, and I feel that this 50 EMA is a decent level to enter this stock. It gave a beautiful opportunity on 26th October when it dipped to around 650 odd levels to buy this stock, and then it rose up. So it is good to be accumulated at these levels. Next stock is Varun Beverages, again well-known name. It's associated with PepsiCo since 1990s and has increased the number of licensed territories and sub-territories since then. It has gotten into production and distribution of wider range of PepsiCo beverages, introduced various SKUs in the portfolio, and expanded the distribution network. As of date, VBL has been granted franchises for various PepsiCo products across 27 states and 7 union territories in India. It has present in about 3.5 million outlets out of total of 12 million FMCG outlets in India, and plans to add 10% to 12% outlets every year. The low per capita consumption of soft drinks in India compared to other developing countries, coupled with distribution expansion by VBL, gives a good growth runway in this country. They are increasing their focus on sports drinks, juices, and value added dairy products, and they will increase their exposure to the food portfolio of PepsiCo also in the future. So that is additional revenue. Now, this is their P&L. They do calendar year accounting. So if you see, this is in millions. So uh, they are likely to grow around 10 to 15% revenue growth is expected, and roughly around 21,000 crore in calendar year 25, with EBITDA margins also 20% plus, and uh, profit of around, they should reach around 4,000 crores, and EPS of around 23 in calendar year 25. So looks good. They are doing capex now in various states to increase their capacity, uh, and they are doing this capex in next 2 years. So this capex should help them in the future. Few, so free cash flow will improve and reduce the debt. So we have seen the EPS of around 23 for calendar year 25. So you can price it because of the longevity of the earnings to around at 15, at 55 to 60 times. It should easily go to 1250 to 1300. They have franchises for Nepal, Sri Lanka, Morocco, Zambia, and Zimbabwe. And the key driver for this stock should be availability of reliable electricity and cooling equipment in rural India. So, and they are focusing on sports drinks, juices, and dairy products. Uh, the point is that on sports drink, juices, and dairy products, the GST is lower, that is 12%, while on those carbonated soft drinks, it is 40%. They have robust supply chain with 110 depots, 2,500 owned vehicles, 2,400 primary distributors, and 9,25,000 visible coolers installed. You must have seen the coolers which are there in all shops, where you can see what all is inside. Uh, Juices, in the juices is the most growing segment. The leader is Coca-Cola with Maaza and Minute Maid. They have 28% market share. Second is Parle, which has got Fruity brand, 19% market share. The third is PepsiCo with Slice and Tropicana with 17 odd percent market share. And the last is Dabur with Real 8.7% market share. Similarly, it is there in everywhere. But in this energy drinks, they have this Get Road, which is the leader, clear leader, and there is no competitor with that. And Sting is also doing well. So this is so if you see, this is the distribution of their sales, how they are doing carbonated soft drinks, juice, and water. Water is again a big segment, and if you see year-on-year growth, uh, 15% in carbonated soft drinks. There is no growth in juice because it's a very competitive segment, as I discussed about leaders and all. But water is growing well, and so the percentage wise, 70 or 72% is carbonated soft drinks. Uh, Juices are going down, and water is going down because again in water, the Bisleri is a big brand which sells maximum, and even you would have heard that Tatas are also planning to buy from Parle the Bisleri brand. These are the various items they offer. So this is fruit pulp, juice-based drinks, Tropicana, Delight, Slice, Nimbus, sports drink, Get Road, various types, then iced teas, then dairy-based beverages. They have various things, and these are their food items from Pepsi, Lay's, Veroid, Cheetos, Kurkure, etc. Kurkure is a big item. Uh, this is their chart. So if you see again, uh, it had a decent dip on 26th October at 825 or something. I also bought that day a bit, and then it has risen up. So once it comes to its say around 1,000, that should be a decent level to buy, but looks unlikely. But anything can happen uh, here. The last is Bharat Dynamics. Uh, Bharat Dynamics is a is the only producer of missiles in India, and management has maintained its FY24 revenue guidance of around 3,200 crore. The problem with BDL was in FY23 they went below their revenue guidance by 700 crores, and that led the stock to consolidate. It has an order book of around 20,000 crore, 20,800 crore, with inflow of 1660 crore in H1 FY24. Execution of current orders is on track with likely EBITDA margin of 20 to 23%. They're focusing on exports, constituting 12.5% of the current order book. And among all the defense PSUs, it has larger proportion of exports in its order book. Nag missiles RFP is likely soon, and ordering is likely to happen FY25. Order value 800 crore. Post which the next is Helena order may flow. Then long range surface to air missiles is currently under user trial. Quick reaction surface to air missile has already been approved by the user and order is likely next year. Amoga ATGM is currently under user trial. Execution of 8,100 crore of Akash 3rd and 4th Regiment contracts for Q4 FY25. Both executions and margins may be aided by progressively higher indigenization and the focus of the government to build a rocket oblique a missile force. Uh, the current order book is likely to be executed over the next 3 to 4 years. And further orders are in quick reaction SAMs, medium range SAMs, missiles, etc. Revenue will rise around 2x. So if you see, it's 3,200 crore. This is in millions. So it in by another 2 3 years, or that is 27 FY27, the revenue should go to 6,400 crores by FY27. Revenue from exports is expected to be 25% by FY27. The margins, if you see, are improving now. 23 was a dip. So if you see, the revenues went down, and now the execution is becoming better. So the PE, etc., is going to improve. ROC, ROE, etc., is good. And if you see here also, EPS is expected to be around 47 or FY27. So even if they do 45 to 50, anything in between that, uh, you can easily price it at 30 times. So it should reach around 1500 from here. Uh, the sales growth is expected to be good. If you see 23 FY23, there was a dip of EBITDA, EPS, everything else. The PE will improve, and with the longevity of earnings and all those issues, you can, because of DCF model, you get higher uh, value for this stock. Margins are improving, EBITDA margins are better, and debt is not there. So it's a positive thing to hold. And again, on 26th October, it went to around that 900 odd levels. And then somehow it has got life into this and has now shot up to around 1350 level on Friday. So this is the stock to be bought on all dips and kept. This should be a portfolio stock and not to be used for trading, etc. Because the order books, etc., are likely to continue. And this is the only producer. There is no competition like HAL to this stock. I have finished. We'll take questions now.
Uh, I had a question.